also known as Diamond Dave, the founder of the highest paid part-time job in the world, Options Trading Academy. And let's talk about how not to lose as a day trader. And this is something that a lot of people struggle with because they often take a day trading course. It's something that's really popular in the trading space, how to trade on the intraday. And a lot of people fail at it. And it's not because of the technical aspects of trading. It's more dealing with their psychology, how their mind works, and then also their inability to admit that they're wrong. So that also would factor into their psychology. And I would compare it to driving down the highway, or really just driving. I wouldn't trust a inexperienced driver. Let's say somebody that's 16, 17 years old that just got their permit to drive down the highway without somebody else that's more seasoned in the passenger seat. Why? Because they don't have experience making certain decisions on the road. When you're driving down the highway, things happen a lot faster because of the speed at which people are driving. There's a lot of larger vehicles like semi trucks on the road. You make a mistake there in that type of environment, and it can be a lot more severe than something you may do residentially, even though most people get in car accidents very close to their house. However, I wouldn't trust a young driver in that environment because they haven't had time to make enough decisions on the road to where I would feel confident that they can handle that situation. In my opinion, most people fail at day trading because of a decision making, not because day trading doesn't work. It has to work because the markets are traded every day. And the markets were traded every day before computers was invented. So therefore, day trading has to work because the markets are trading every day. The markets were trading every day before any of these computers and high frequency traders ever existed. The market was traded every day, even after the computers and the high frequency traders at places like the CBOE in Chicago. However, there has to be something missing to where most people that buy a day trading course struggle to trade on the intraday. And one of the biggest things they struggle is admitting that they're wrong and making that decision and then managing their trade off the fact that they've realized now that I'm wrong. And many people will stay in a trade because they don't want to admit that they're wrong. That has nothing to do with trading. This is how they run their life. We see this on YouTube and social media all the time. What do we see? People trying to prove to somebody else that they're right. And there's nothing wrong with being confident in what you're saying, but this really deep desire to be right all the time is why most people struggle trading, because the trade is easy. What's difficult for most people is managing the trade. Let me give you an example. We're looking at the SPY ETF, right? So let me zoom this out. We're looking at the SPY ETF, okay? And we're looking at this on the 5-day with a 5-minute candle. Now, I had their resistance, which will be their supply zone, kind of around 415 to maybe 416. All right, plotted that out before the market opened. And I said, well, if I was going to play this on the intraday, once it started to hit that supply zone, I would look to get puts, right? Because I feel like over the 5-day, what we've done is we've got into this supply zone, right? Really what to me is also a resistance level. And we've sold down off of it. So this is on the 5-day on the 5-minute candle. So I would look to get puts on this, right? Because I believe it's going to continue to reject. However, if I was to have gotten puts relatively first 15 minutes, 20 minutes of the market, let's say at the 414 strike, I probably would have had to exit by now. Why? Because it's moved up to the 416 and now it's just trading sideways. And based on my expiration date, I may start having an accelerated loss of premium. So when you're looking at the SPY, you got June 6, June 18, and June 10 puts, right? So you got Monday expiration. I think that's going to be Wednesday expiration and then Friday expiration. So you got 3 expiration dates during the week, okay? And are there, let's see, do we have puts at the 14? So we do got 414 puts. So we got 414 puts. We got 416 puts and we got 415 puts. Therefore, on the open, if I would have gotten 414 puts, would have put me in the money. We started moving down to the 414 and then we bounced back up. So now we're right in the right at the resistance or at the supply level. But if I would have had puts that expired today, I would start getting a really accelerated loss of premium. If I had puts that expired on Wednesday, I would get somewhat of a loss of premium. If I had puts that expired on Friday, I would experience less loss of premium. However, the Wednesday and the Friday puts will cost more money. In my opinion, if I was trading this on the intraday and I had Monday puts, as soon as I got this candle, right, this second green candle, it would have been time to exit out of the put, right? It would have been time to exit out of it. Wednesday puts, probably the same thing. Friday puts, I maybe can hold this maybe till the second session, and then I may have to start thinking about exiting because I don't know how the market's going to open up tomorrow, right? The market could reverse later this afternoon and start to sell off. You never know. However, the challenge that most people have is that when they realize that they made a bad decision, especially intraday, what do? Do they stay in the play hoping it turns around? Do they just ignore what happened? So what I would do in this scenario, if it was me, I would buy one contract, play it. If it don't work, I wouldn't trade the rest of the day. Why? Because I made my trade for the day. I would buy one contract. If it don't work, I don't trade the rest of the day. Wouldn't go on Twitter and try to figure out what's running hot. Wouldn't go to a trading room and try to have somebody hand me a play. I would be done trading for the day. Why? Because I made my trade for the day. And I've experienced a scenario where I set up my supply zone. I also can set up my demand zone, but it wouldn't be as important to me on the intraday, but you can kind of see what the demand zone is here. I've plotted it out. I went into the market with a plan. I executed on my plan. The market did not go the way I anticipated. So part of my plan was also to exit right at my stop loss. I exited at my stop loss. And what happens after that don't have anything to do with me because I'm out of the market. And I would go finish out the rest of my day. And this is what a lot of people struggle with in the market, is making those type of rational decisions over and over and over again because they're not trying to prove that they're right. Right? The market is always right. It doesn't mean you're going to be. Right? So the market is always right. You may be wrong. And you have to kind of understand that. And especially on the intraday, because things are happening a lot faster because you're dealing with a shorter time span. You're dealing with a much more compressed time span. But I'm 100% convinced that somebody can drive down the highway, which is extremely dangerous. In fact, it can be fatal to you. You can trade on the intraday. You just have to be willing to accept that you're wrong. And you may be wrong 70% of the time. It's the 30% that you're right, which would allow you to be profitable. But you have to learn how to manage, one, your psychology, your emotions, and also manage the trade. And this is why people try to run the software to tell them what to do. They try to run to somebody else to tell them what to do because they don't want to have to make these kind of decisions. However, everybody that I know that's successful as a trader, an actual trader, they make these kind of decisions on a day-to-day basis. They make them on a swing trade basis. They make them on a long-term basis. Every business owner I know makes these kind of decisions. They're constantly having to make decisions about managing a situation, right? You just can't hand it all to a computer. And so this, in my opinion, is how to become successful as a day trader. It's not investment advice. I don't sell a day trading course. I know people that do that. That's what they do. That's not what I do. I'm more of a long-term trader. But this week, I'm going to spend a lot of time working on the intraday, right, trades, just as an exercise. But I would have had to exit based on where I knew I was going to buy my puts. These two green candles would have got me stopped out. And then it just means that I'm done for the day. Then tomorrow I can try it again. I could try it again on Wednesday, looking for contracts that expire on Friday. I could try again on Friday for 0-day expiration contracts. But what messes most people up is they either don't exit the trade because they trying to prove that they're right to the market. They're trying to prove that they made the right decision buying this particular course, right? So they're looking for that short-term double meat hit. Or I think I said the first one is they don't exit the trade, or two, they exit and then they look to go right back in to play the other side of the trade. So now that they see that the market is going up, let me try to play the upside, but we see there is no upside. It's trading sideways. It's what we call barcoding. And it's been doing that on the 5-minute candles. We're going into 11 o'clock Eastern Standard, so we're getting ready to go into the second session. The majority of the volatility is getting ready to leave the market. Now, that could cause this thing to sell off because it could get all the buyers to leave. Because what we're seeing is a lot of indecision in the market. The market doesn't know which way to take this particular, it doesn't know which way to take the SPY. That's why it's been sitting on 416 on the 5 minutes pretty much for an hour. The market doesn't know which way to take it. There's a lot of indecision. So as the volume leaves, you may see a sell-off. Now you could potentially play that because we know where the supply zone is, right? So as it starts to move out of that particular zone, you may figure out, okay, well, I'm going to see as it moves down, what is it going to do as it gets closer to the demand zone, right? However, you may just say, you know what, I'm just going to exit and keep it moving. And so I think that's what a lot of people really want to start looking in themselves is, how am I managing my trades? And what are some of the things that I'm doing? Because, you know, when you're on social media, you got all these people feeding you stuff and telling you that this is the hot play and yada, yada, yada. But if you haven't really done any research on it, how confident can you be about it? So I take counsel from a lot of different people, but I take what they say and I go and I test it. I don't just go with it because that's what they say. I got to test it because I got to put my money behind it. And that's really how I learned how to play the options game. I never took anybody's plays and just ran with it. I used to take it and test it and try to figure it out and try to understand why is it working the way it's working. So currently right now I'm looking at Tesla and I'm looking at trading the SPY. So you see how it just bounced. It's starting to go down out of that 415. So it may move out of that supply zone and go into a bearish position. And this could happen as we start taking a lot of volume out of this market, because normally the first 9:30 to 11:30 is where you're gonna get the majority of the volume in the market. As the day goes on, a lot of times under normal conditions, the volume starts to shut down. So I would have already got stopped out. That would have been my trade for the day. I would not have jumped back in because now I'm chasing the market. And that's what catches a lot of people. They chase it. You don't have a plan. You're not positioned. So then you chase. Or your initial plan don't work. So then you chase. There's always going to be another day in the market, right? There's always going to be another day. The SPY's not going anywhere. The QQQ's not going anywhere. The SPX is not going anywhere. The E-minis futures is not going anywhere. These indicators are not going anywhere. These ETFs, these indexes, they're going to be here tomorrow. In fact, they're going to be here when we pass away. And that's what I want to get you to understand. Therefore, in my opinion, really start to work on your decision making, right? And run a simulation. Put yourself in an intraday period and simulate what you do. I don't believe that, well, if it's not real money, it's not the same thing. No, you're going to do what you're going to do with money in your pocket or not. Put yourself in an intraday situation and then simulate what you will do in that situation. And I think you'll start to understand, especially as you start to repeat that over and over again, what's the best scenario for you. So if you got any questions, talk to me in the comments. David W. Williams, also known as Diamond Dave. I'll talk to you later.